Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard.
John, welcome back to the show.
Jim, pleasure to be back on the show.
John, do you expect the market for resource juniors to improve this month?
Well, August is typically the dog days of summer. People are on vacations. Here in the United States, however, next week the kids are already going back to school. So summer vacation are behind us. People finish school at the beginning of June, unlike in Canada where it's the end of June and you don't go back to school until Labor Day, the first Monday of September. So the mindset here is summer's pretty much over and we need to get back to work. But in the markets, we're not really seeing that. July was, the first part of July was pretty dismal for the resource juniors, but there was a modest pickup in value traded during the second half of July. And my own personal hope is that as we head towards September, people may start to take a look at the juniors during the quiet month of August and start accumulating positions. And the pace at which juniors have been descending into the below 10-cent range, at least the TSX Venture listed resource companies, that also stalled in July. So we are seeing a kind of bottoming effect right now. At the peak of the rally, the sort of post-2020 COVID rebound rally, this was in early 2021. Only 22% of the 1,100 or so, 1,300 venture companies were trading below 10 cents. Since that, then it has climbed to about 38%. Now, it was about 54% during the low in November or March 2020. But even that was not as bad as in very early 2016 when 66% of TSX Venture resource listings were trading below a dime. Financially, they're in pretty good shape too. About 52% of them have more than $500,000 working capital. About 31% have negative working capital. You really want to be careful of these negative working capital companies. In total, the system, as of the last filings, and we just updated all the financials that were due in the past month, there's 5.4 billion Canadians sitting in the treasuries of TSX Venture listed resource juniors, but there's 3 billion owed by the other group. So what's trading below a dime? There's about $3 billion worth of market cap parked below a dime. And in terms of companies that have more than $200,000 working capital, I count about 620 of them out of the 1,141 companies. So if you have the ability to search and look for the companies that have positive working capital, and financing activity has not been as dismal as one would expect during the past quarter. It is better than it was in the first half of 2020 for understandable reasons, but it has not died off as sharply as one would expect in terms of the trading value. Now, the trading value is pretty low, and the resource juniors are still representing, except for the odd day, between 50 and 60% of traded value. So in terms of companies attracting risk capital, the market out there is thinking the resource juniors may be the ones to go, which is why last week I talked about, for the September 9-10 Metals Investor Forum conference, the 5 companies that I've picked are all discovery exploration-oriented companies. I have no real idea what's going to happen to the prices of metals. We did see in the past week gold try to claw its way back over $1,800 an ounce. The market is still very sensitive to the trend in gold price. You can really see the air out when it's down $30, $40, and when it was trying to break through 1700 on the downside, the mood was pretty gloomy. And that's unfortunate. I think it's going to be a while before we see the metal prices firm. We have a complex period facing us. We have kind of the gauntlet thrown down by Nancy Pelosi visiting Taiwan and China rattling its sabers in advance and then getting negative blowback from its own nationalists saying, hey, how come you let her waltz in there and you didn't do anything except march around Taiwan afterwards, banging your military pots and pans? I mean, what's the matter with you? You're telling us to be wolf warrior patriots. Let's get on with it. Let's show the Americans kick some ass there. Tell them that they don't belong here, that Taiwan is ours, and that they should go deal with their own domestic problems. And that's a sort of a background problem bubbling away. That's such a serious problem that it's very unlikely to spiral out of control because there are so many dominoes that fall over if China and the United States end up in a military conflict, especially given the vulnerable dependency on the semiconductor industry that is based in Taiwan. And I suspect there's been some behind-the-scenes conversations that this is a red line. You can't do this now. And so back off. We have to save face because you've been telling us that you can't do anything. We are worried about what you're backing of Russia's invasion of Ukraine, and you might be thinking the same about Taiwan, but you can't do this now. And of course, we don't really want gold to go up because there's something terrible like that happening, because inflation will go up, costs of everything will go up, and it's not necessarily that any of the miners will be better off as a result of gold going up, simply because major inflation is on the uptrend. I'm personally looking forward to August as a bottom fishing period to sift through all these companies. There's very little anticipatory speculative premium. Some of the companies that have had full-blown programs going during the summer, they are now attracting attention and getting an audience. You have to be careful for the ones that have a seasonal component. If the snow starts to fly in October, November, you better be careful, especially if assays end up having a slow turnaround. But for those that are able to continue exploration activity right through into December, take a break for the Christmas holiday season, and then resume in January, those are the kinds of stories that it would be good to focus on right now if you do not want to have to pay attention to the gold price or the copper price every day and worry about inflation numbers and the recession threats and the general macroeconomic picture.
John, FPX Nickel published a metallurgy update for the Decar nickel project. What did we learn?
Well, this was a very long and complex news release, not aimed at your typical retail investor, not even aimed at your institutional investor, who has been pretty much absent from the market of these advanced juniors such as FPX Nickel with its Decar project, for which a PEA has been published and for which they're working on a pre-feasibility study. This was a metallurgical update that provided a lot of detailed information for two types of audiences. One would be the big producers, nickel producers such as Vale, who are watching from the sidelines wondering, is this potential 70-year resource of nickel, low-grade nickel, in a stable jurisdiction, possibly carbon neutral? Is this for real? And the other group is the car makers and the battery makers. The car makers themselves are not likely to invest in a mine. They may end up supporting it indirectly. It's the battery makers who have the biggest stake, because they're going to need to secure battery-grade nickel sulfate. So this press release itself did not really address the nickel sulfate hydrometallurgical part of the whole project. It addressed the earlier stages, and the two things it brought up was the mineralogy. Where exactly is the nickel all hiding? And so they did some detailed mineralogical studies with ChemScan analysis, and they discovered that there's no nickel parked at all in the silicates such as the olivine lattice, where often in any of these ultramafic systems, you'll find that of the 0.2, 0.3% nickel grade that they have, 0.1% is attributable to the silicate trapped nickel, and that is not recoverable. It is extremely extensive to crack that out of it. So that's with projects like Turnagain, where you see a 50% recovery based on the total nickel assay. That's due to the fact that it's silicate-hosted nickel that's making up part of that grade. What they did discover is that only 8 to 12% of the nickel resides in sulfides, and that's the hazelwoodite and the pentlandite. And neither of these are recoverable through the magnetic separation strategy that they are proposing. So one of the questions that the sort of producers have been thinking about, how reliable are your Davis tube recovery assays? And a Davis tube recovery assay only recovers nickel that can be magnetically extracted down to a minimum grain size. And in this case, they've chosen 5 microns as the minimum grain size to be recoverable. And so these additional studies that they did, they evaluated that, yes, awareoite is where 85 to 92% of the nickel is hiding, and the majority of it is in the 5 micron and above category. And this was important. They wanted to see when you see these grade differences, are they consistent depending on the overall grade? Is it measuring it accurately? And the press release was extremely technical, and it was aimed at these producers who will then call them up and sign a non-disclosure agreement and then look at the details and say, yes, okay, so your numbers that you're using to optimize your ore schedule, saying we'll start with the Southeast Baptiste zone, move to this one here and all that, the grade is going to be the recoverable grade that you get. So that was all positive stuff. What the market may not have liked, and it actually sagged a couple pennies, is that when they moved to the flotation studies, the first part was mainly relevant to the magnetic separation part. Now, flotation is what produces that 60 to 65% ferronickel concentrate, which is a major improvement from the 13% or so that Cliffs had in its original 2013 PEA, and that makes lower shipping costs. It makes it more attractive to the stainless steel mills to push in. But one of the assumptions that they had made at bench scale was after they got the recovery, the 85% or so recovery from the magnetic separation, and subjected it to flotation at bench scale, they were assuming a 92% recovery. And in fact, when they did the more scaled up studies, that turned out to be optimistic. And this is what you always worry about with metallurgical studies. You hope that as you fine tune the process on a scaled up basis, you will get better recoveries, but more often than not, you find devils in the details and you get lower recoveries. And this dropped down to from 92% down to 87%, and then when you multiply that by the original recovery from the magnetic separation, you end up with a lower figure than what was assumed in the PEA. Fortunately for them, they were also studying the magnetic recovery circuit, and they recognized that the larger grain sizes, they were ending up hung up in the system and not coming out as expected. So at the end of the day, they expect the loss from the lower flotation level recovery to be balanced out by an improvement at the magnetic separation level that improves the recovery there. And when you multiply the two together, you're back to the PEA assumption. All this work that they did, it produced enough concentrate for them to begin hydrometallurgical studies. And this is phase 3. This is the important part that the battery makers and the car users are waiting for. This first part was what the potential producers who couldn't care less about the electric vehicle market were looking at. Now the question is, can you profitably make nickel sulfate, battery grade nickel sulfate from this concentrate? So these studies are now underway. They hope to have a scoping study of some sort out by September, which describes what they expect the economics to be. And then sometime early in the fourth quarter, they hope to be shipping actual samples of nickel sulfate made through their hydromet process from this concentrate to the battery makers for them to do the purity studies. Because at the end of the day, it's all about purity. And if they've shown that the numbers are such that it's going to be worth our while to make nickel sulfate from this, it's going to be from a single clean, verifiably clean source, that will really up the interest from this group. So we're in a holding pattern right now, waiting to see what the numbers say about making nickel sulfate from the concentrate, and then more importantly, waiting to see what the reception is in the fourth quarter from the battery grade makers as to whether they see Decar as a viable source for clean battery grade nickel sulfate. And in terms of the market still going sideways, nickel did not have a good month in July. However, it has clawed back, trying to get back in over $10 a pound. And the warehouse stocks in both Shanghai and LME, they're still at really at the lowest it's been in over 7 years. So that situation has not improved at all, and the potential for nickel to recover in the fall, that is strong. And again, if the market likes to see the trend in the metal before it gets into these advanced companies, that's what we're seeing here. And again, if you're optimistic that the nickel price is probably stabilized here and maybe has a little bit of upside, this would be a good time to take a position in FPX Nickel ahead of the fall, when people start getting serious about everything again and perhaps seeing a nickel price uptrend. I've done a detailed tracker analyzing this press release. Because FPX Nickel is a KRO favorite, it is unrestricted on the website. And if you go to my homepage and click the blog connected with this Kaiser Watch episode, there'll be a direct link into it that you can click on, and you can bury yourself in the gory details related to my assessment of what this complicated news release means for the company.
Tower Resources slumped in July when it published final results for its spring drill program at Rabbit North. What did the market not like?
The market had been told that here's our understanding of the lightning zone. We have this sort of 300-400 meter wide gold grain dispersal train picked up through till sampling on the Rabbit North project. It emanates from just to the northwest of the Duran stock, which is a copper gold porphyry system that just really isn't good enough to be a mine, and it stretches for about 10 kilometers. And the big story at the start of the year when I jumped on it was they started a 4-hole drill program late last year, and they were just kind of guessing. The train stops, there's a bunch of barren rubble farther up ice, so they just started probing, drilling several holes to try and find it. And with the third hole, they got what was clearly a sulfide intersection. They could not tell that this was going to be gold bearing, but it was very different from the more epithermal style mineralization that you see in the porphyry system. And Stu Avo said, "Whoa, this is mesothermal orogenic style mineralization. This is very different for this property." That may also explain why in our till sampling program we don't have a mess of other metals mixed in with this, because these orogenic systems, they'll have a bunch of the pathfinder elements but they typically won't have the other base metals that are associated with, say, the porphyry system. And so this hole became the basis for an interpretation, plus the very last one, which was angled in the opposite direction and just nicked what they call the lightning zone. At the time, they called it the golden zone. They said, okay, there's a drill hole about 400 meters to the northeast done in 1997, which has a pretty interesting assay. It was never followed up. The width of the train and everything points towards a northeast orientation to this structure. And the good part was they thought they understood what this was all about, and so you drill a series of sort of northwest angled holes along this trend. And because the gold in this system is very closely correlated with pyrite, they can see visually when they're in the good stuff. And as they marched to the northeast, they got gold where they expected it, or at least the sulfides, but the zones were narrower than they were expecting from where the hole 26 had been hit at the discovery zone. And when they finally got the assays, it was quite different from what they expected. And in fact, one of the holes more to the northeast, hole 31, the bottom of it, which was well beyond the projected trend of the lightning zone, it had some decent gold intervals on it, and they started thinking, this must be a parallel zone. So I guess it gets better, because one of the negative things about the orientation of the assumed orientation of the strike was that you only had 300 to 400 meters of strike length, and then there was nothing either to the southwest or the northeast, which meant that everything depended on the thickness of the zone, of the mineralized zone, and how deep it goes. Now, with these orogenic systems, what everybody likes about them is that they can persist for a couple kilometers in depth with reasonably consistent gold mineralization. So you would have to develop much of your tonnage footprint going vertically in a setting like this. But when they got the results, they were quite puzzled, because it was like the whole lightning zone had fizzled out. But when Stu Averill started to really look at the general geological context and how these holes sort of some of them had been scissored, and that he was able to figure out, we've got this wrong. This thing that's going off to the northeast, that's actually a narrow splay, and it probably does connect with that 1997 hole. But what he had also observed was that in 2004, about 500 meters north of this discovery hole cluster, a vertical hole had been drilled through a basalt lava cap. And to the north of this property, there was a very young Miocene-aged flood of basalt that sort of came up, and because the basalt's a very, not very viscous, it flows quite well, and explorationists hate it because it's like paving the geology with tar. It makes everything undercover. You can't see through it with geochemistry. But the previous operators who are probably chasing an extension of the magnetite copper zone that's to the north, they may have drilled a speculative blind hole just to see what's going on there. And the surprising thing about it was that it had delivered a decent interval of 74 meters of 0.58 grams per gold. And it was underneath this lava cap, but there was no copper associated with it. And since they were looking for copper-gold system, they never really did anything with it. Well, this hole, when you draw a north-south line through the sort of cluster, the discovery cluster, you also see that there is a tongue of the basalt that follows this line. And the main basalt flow is from sort of northeast to southwest at the top of this hill that they have there. But here was this fairly narrow tongue heading south, coinciding with the area where they have these drill holes. And of course, with the hole 31, where the deeper portion intersected, that also lined up with this corridor. And so the new model that Stu Averill has come up with is that the northeast orientation of the lightning zone is completely wrong. It is actually a north-south orientation. It's within that dispersal train, which is, still 300-400 meters wide, and it's basically parallel with it. And this is potentially very good news. When the market saw this press release, they saw that there weren't these great intersections confirming that we just march our drill in the northeast direction and delineate, the 2 million ounce the deposit. They just saw, oh, it's not there. They didn't really read the details and understand. Well, now we have at least 500 meters of running room to where that 2004 hole is, and even though the grade is not going to be underground mineable grade, they may have just hit the edge of the system. So the main significance of it is that this system is present in that direction. And what Stu believes is that because this is a structural corridor, which the orogenic fluids exploited during their ascent, it would of course have been weakened. And when you have glaciation and erosion, it would have preferentially dug out kind of a channel along the structure. But this wasn't visible to anybody because when that basalt flow happened not that long ago, and it flowed down along the ridge, it found this channel and it basically followed the path of least resistance and filled it up. And it may go even farther south because just beyond where they have that cluster, there still is no bedrock. There's no outcropping bedrock anywhere in this area. Everything to the south where they have the Golden Till dispersal train, it's all filled with rubble and scree and stuff so that you can't see what the bedrock is like. And this was very interesting development for me because it told me two things. One, there's at least 1 to 1.5 kilometers before the property boundary to the south following the path of this dispersal train, and there's at least 500 meters to the north where that 2004 hole is, and I'm waiting to find out how much farther you go before the lava disappears and they can see what the bedrock is and that it's clear that the structure's no longer there. But it looks to me like it could be a 1 to 2 kilometer long structure that has decent grades over good widths already from the holes that they have done, and they've got their permits for at least the initial drilling, and they hope to be drilling sometime in August, and they'll step to the north and south of the original cluster and drill a series of 50-meter step out east-west holes at different angles just to confirm that this new geometry interpretation is correct. And the stock's sort of hovering here at 20 cents because the market, it's in a bearish mood. It was disappointed that the initial interpretation was not correct. We're in this generally bearish market where the glass is half empty rather than half full. So for me, this is like a classic bottom fishing opportunity. You can see the geological context. You can see why this thing was never found before, despite lots and lots of exploration activity on the Rabbit North project. Nobody was ever looking for an orogenic gold model. It was always a copper gold that they were chasing, and this system just never evolved enough to create a mineable deposit such as over in the Afton area, and where this orogenic system, which may have been unrelated to whatever drove the porphyry system, it will have been invisible if it weren't for all this scree coming down from the Durand stock that is a host for the porphyry mineralization, and from this basalt cover obscuring this. Prospectors would have found this ages ago, and if this is a multi-million ounce deposit, it would already have been mined out. So all of this was made possible because the company decided last year to do a till sampling program because a major whom they were trying to get to auction had said, well, give us a better geochemical database of this project and then we'll consider perhaps doing a deal. So they said, okay, we'll do that. And this is Stu Averil's overburden management company's specialty, is to do this type of till sampling, recover all the metal grains and plot them up and try and figure out where they came from. And they were just doing it because this was the systematic thing to do, and this train emerged, and they said this is something special. Nobody would have seen this without having added this layer of data gathering. So I love this story. I think it's going to be a very interesting play. If they do start to confirm that, yes, this is the right model, this is a play where they can put in a winterized camp and drill right through winter. It can be a year-round project that's not far from Kamloops at all. But the critical part will be, is this new interpretation of the structure correct? And the fact that the stock, with its 145 million shares out and 20 cents, that's like a $20 million valuation. You're getting this potential 10 to 20 bagger upside as a result of the market's natural tendency in a bear cycle to see the glass as half empty until proven otherwise. It's an ideal market to look at emerging discoveries because the market refuses to respond aggressively until it sees no-brainer results. These are not going to be overnight no-brainer results. However, because of the correlation between pyrite and gold zones, they will be able to put out press releases showing where they are intersecting the mineralized structure. People can start following it and see where it's taking shape. And then, of course, the assays will tell us how much gold there is actually in it. And if it's confirmed that this is indeed a medium-grade system, subvertical, striking north-south with decent widths and potentially persisting who knows how deep, this stock will finance probably in the final quarter of this year to get this thing escalated into a classic S-curve discovery delineation play.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard.
Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.